maybe just kind of an overview of some of the options that are out there. I think we'll spend most of our time talking specifically about the Paycheck Protection Program. There are a few other options that are out there as well, but that's the one that everybody's kind of zoned in on right now. Obviously, the CARES Act was passed, a week and a half ago now. And with that, there's essentially three different programs, or there's two main programs that are part of the CARES Act. One of them is the Paycheck Protection Program. The other is the Main Street Lending Program. The Paycheck Protection Program essentially is designed for businesses 100 employees or less, with a few exceptions that are above that threshold for certain industries. And then the Main Street Lending Program is one that's designed for companies, I believe, from 500 to 10,000 employees. Now, that particular program we don't have much information on. They are currently working with, the SBA is working with banks at this time to kind of put that program together, but ultimately it'll be a lending program, whereas the PPP option allows the opportunity for forgiveness for those who apply for it. Generated under the CARES Act is what's known as the SBA Economic Injury Disaster Loan, which remains a viable option for companies as well. And so PPP, that's the main hot topic for everybody at this point. The program essentially, and the ability to apply for it, was rolled out on Friday. The program is allocated currently $349 billion in forgivable loans to small businesses, as I defined earlier. Essentially, the proceeds are used to cover their payroll costs, mortgage interest, rent, utility costs over an 8-week period once the loan is made. These payroll costs are capped at $100,000 on an annualized basis for each employee. And like I mentioned, the ability to apply for it started with most banks on Friday. Some of the larger banks, to give you an idea of what we've been doing for the last week and a half, is scrambling to essentially build out the systems internally to begin processing all these applications. So obviously the demand is going to be much higher for the B of A's and the Wells Fargos and Chases of the world. So in some of those cases, it took them a little bit longer to roll it out, but most of us, like Synovus, were able to roll it out on Friday. And what you essentially have is the bank, in this case, is the processor of the loan. The SBA ultimately makes the decision on the loan. So there could be some circumstances where people don't get approved, but just keep in mind that's not necessarily the bank's decision. That's a decision by the SBA, and we're just facilitating that right now. And we're facilitating, getting the proceeds to the companies that are approved. And that's a tremendous process that right now nobody knows kind of the timeline of what that's going to look like. I hear that there are some fundings that are going to start taking place here pretty quickly. So you have to apply to a lender that's an approved SBA lender. Obviously, most of the large banks are, most of the regional banks are, and there's plenty of community banks that are as well. Easiest way is to just call up the bank or go to the bank's website and figure out if they're an SBA loan provider, and you should be able to apply there then. The recommendation has been, and this is a key point, is that you have to have a deposit account with the bank that you're applying to.
There are folks that can't get the attention of their bank, or for one reason or another do not have a bank that is SBA approved. When Wells Fargo capped out because of their issues, they sent 3 names and links of banks accepting non-customer applications, which included U.S. Bank, Lendio, and City National Bank. So we are providing those 3 options for folks who can't get either the time or don't have the right relationship with whoever their primary bank may be.
And then to that point, I used to work at Wells here in Roswell, and there's customers there that I still call on regularly in hopes to bring them over at Synovus at some point. And I had 5 of them reach out to me yesterday. And because these, for me, were active names that I'm calling on and trying to move to Synovus, I was able to get our team to help them establish accounts with us immediately so they can apply with us. I think in 3 of those cases already, the accounts were open yesterday.
It's true that the banks need more than just your personal account. You need to have it set up in the name that the actual loan application is going in under, so that they can receive the funds in your bank or any bank that they've applied through. Is that correct?
That's correct. And then the other part of that, as I mentioned, is because opening that account, that's essentially our due diligence process. So allow us to vet business out as well. But as far as who can apply, I mentioned this earlier, pretty much all businesses, including nonprofits, veteran organizations, sole proprietorship, self-employed individuals, independent contractors with 500 or fewer employees can apply to the program.
So, I have a lot of clients that are partnerships or closely held S corporations, and they've got really large K1s, but maybe small W-2s, or they're not allowed to have a W-2 because they're a partner in a partnership. And by definition, you can't be a partner and a W-2 in a partnership. So for the purposes of that owner getting their benefit, are you grossing up, or are you seeing people gross up the W-2 calculation for the limit of 100,000 for those owners? The K1 income easily supports it, but are they supposed to be applying separately, or do they apply as part of their underlying organization?
I wish I had a better answer for you on that. That was a discussion on the call I was on the last hour, as well as an article that I read just before that going into it. As I mentioned earlier, sort of where most people are at in this process is kind of getting all those applications submitted, and the next step in that process is for all the banks to verify the payroll calculations. And there's continuous training around that and changes around that and guidance coming on that. So it's really hard to answer that question specifically. The best advice I can give at this point is whoever's filling out the application, when they have that payroll calculation, do their best to complete it and then work with the bank. And as those questions get raised through that process, that's where we'll start to see some more guidance on that. And I think we'll get answers to a lot of those questions. As far as what companies are going to need to apply, basically, they're not submitting any financials or anything. They're basically submitting this payroll information. And so I think most of the companies that are interested in applying for the program already gathered that with their CPA, and we'll have that ready to submit. And then as far as the amount of the loan goes, right now it's based on your 12 months prior average monthly payroll with a cap of $100,000 per employee in salary. It's based on the average of that, and the maximum loan amount is 2.5 times that. And loan proceeds can be used for payroll costs, including benefits. They can be used for interest on mortgage obligations that were incurred before February 2020. Rent under lease agreements that were in place before February 15, 2020, and then for utilities as well. And employee costs, what does that mean? Salaries, wages, tips, employee benefits, family medical, sick leave, et cetera. It's a pretty broad definition of what it actually includes. So again, I think we're going to filter some of that out as people start to really look into these payroll calculations and come up with a lot of questions on what can and cannot be counted. So, but the key there is 2.5 times the average 12 months prior's monthly payroll is the cap. And that's essentially what the banks are coming in to verify. The customer is going to fill it out themselves, and the bank is going to step in and do their calculation. And the bank could, in certain scenarios, go back and say, we've calculated your maximum loan, let's do this. And then ultimately that's what it would be. The great thing about this program, obviously, that most people are aware of is that 100% of the proceeds can be forgiven. There's a couple requirements for that. I mentioned earlier, there's an 8-week loan or 8-week period once the loan is funding where they start tracking this. And I believe you mentioned it earlier, for some that there could be some seasonality to their business, et cetera. They might not have, you take a school, for example, a summer payroll would likely, which will be the 8 weeks kind of coming here, pay significantly less. But the benefit there is, and the answer that I've gotten so far is, ultimately the amount of the loan that's not forgiven is at 1% interest over a 2-year period. And in theory, if you receive the funds and didn't need to extend it out for payroll, you could just pay it right back, as there's no prepayment penalties on this. There's a certain amount of requirements for that forgiveness. The first one is number of staff. The loan forgiveness will be reduced if you decrease your full-time employee headcount. The second is level Your forgiveness will also be reduced if you decrease salaries and wages by more than 25% for any employee that made less than 100,000 in annualized income in 2019. The good news is for some of the folks that had to let people go, if you rehire them and bring them back by June 30th, restore that full-time employment salary level and benefit, then it would apply to the 8 weeks on this program. So that is my main concern about this whole thing is I, in general, think some of those forgiveness requirements can be somewhat vague. And who knows if they're going to change at some point. But for the most part, the safety net there, if you will, is the fact that whatever amount is not forgiven, it's payable over a 2-year period, at 1% interest. So I think, in most cases, people would just take whatever amount's not forgiven and just give it right back and walk away. So, but there could be some more dialogue around that in the future as well. Let's see. That's kind of the overview of the PPP program. Does anybody have any more specific questions? What I'll tell you too is that I think we've all seen it. There is a tremendous amount of information out there. Banks are putting it out there. CPAs are putting it out there. Even law firms are putting it out there. So there's any bank that you work with, if you go to their main website, there should be by now built out a specific COVID-19 page to it where anybody, any business owner can go and get information. I know, just thinking of Rotary in general, some of our businesses are kind of fall under that sole proprietorship or that smaller business, if you will, that don't necessarily have a relationship manager that they work with every day. So I would refer them to that page for the information and what's necessary to start that process. Be kind of surprised too if by now not most have started it already.
Yeah, I guess one challenge that I've been having too is with clients that are antsy, right? Because you have the free $10,000 you can get through the EDIL. And if you ultimately apply as an independent contractor starting this Friday with guidance we don't have, that might offset. It definitely offsets against the PPP that started last Friday. If there are small independent contractors or small little single member S corporations, I'm telling them just to get the $10,000 on the EDIL forgiveness loan versus waiting for this Friday.
Have some of the highlights of the program. As far as eligibility goes, it essentially is the same as the Paycheck Protection companies, not more than 500 employees. Proceeds can be used to pay fixed debts, payroll, accounts payable, other bills, etc. It's got a maximum loan amount up to $2 million. There's no limitations on payroll. There's no SBA guarantee fee. I think the maximum rate is 3.75% for a for-profit business and 2.75% for a non-profit business. The loan can be extended up to 30 years, deferred for up to 1 year. And loans over 200,000 there will require a personal guarantee, and then collateral will be required on any amount over 25,000 should it be available. If a business didn't have any excess collateral and there was no personal collateral there, they wouldn't necessarily take it. But if it's available within that program, they certainly could take it. And then to your point, that $10,000 advance would be considered a grant and not required to be repaid if the loan is denied. So they could go ahead and just in theory receive that $10,000.
But if you are a small business and your PPP calculation that's nebulous and we haven't been provided yet, that's going to start this Friday, is going to net you less than 10 grand, you're better off going and doing an EDIL $10,000 grant, making a good faith assertion that your business has been impacted by the crisis and moving on. I think it's an option for some of our smallest businesses.
That's exactly what we've been suggesting, that immediately folks in these smaller businesses, sole proprietorships, 1 or 2 man operation, go ahead and apply for that because they can always, and what we've seen so far is that within 7 to 10 days, some folks have actually been funded in that economic injury disaster loan.
That's the first I've heard of anyone actually receiving it, so that's good.
Yeah.
Good.
When we put out the initial charge up the hill on this SBA and this economic injury disaster loan, the EIDL, one of the things we pushed on was go and read it and understand it, but apply. Because if you're not, it's first in, first out. So, and it's a $10,000. It makes total sense for a small business guy and operator to apply for that.
The spirit of the program, I think, is designed for companies that are sort of in that need at this time. But that guidance never really necessarily came out from the SBA, and it was very clear in their definition that, this is available for all because there could be a lot of uncertainty moving forward. I've got a company that they're an essential business. They have not been impacted to this point. They have not had to lay off any employees. They've got a strong backlog through October, and they're applying for it. They're a $65 million company. So arguably they don't need it now, but I think they certainly do fall under that uncertainty as to what lies ahead in the future. So it's in their best interest to go ahead and apply for it.
As long as you use and incur the approved expenses and have the support for paying your folks, etc., the loan will still be forgiven. There's no proof of economic need. So I hate to say it, but I would encourage everyone to do it as well. I think there might be something coming out to where if you get one of these forgivable $10,000 grants or forgivable PPP loans, you won't have to include that in income. Don't quote me on that, but I'm hoping that's what ends up happening.
Exactly what I heard, William, a week ago from SBA, from Jeff Patterson here in the Georgia market that works with Matthew Asher from Synovus, is that they did feel that it was going to be forgivable or non-taxable.
I did hear non-taxable, yes.
Steve, I know you and I have talked about nonprofits and maybe taking advantage of this even for our Rotary Club. How does this impact the nonprofit world?
Well, the way we understand it, and William, you can jump in, for the current PPP, the 501c3s can apply. 501c3 or veterans groups. And that's really important because some of these nonprofits like North Fulton Community Charities or Drake House or some of these others, it's really important to keep their staff on the ground and together, because as we come out of this, these services, these charitable services are going to be even greater. There's going to be greater need for them. So, I've been talking to many of them, and a lot of them are applying for this.
The new standard deduction has been increased to the point where most folks aren't itemizing their deductions any longer. However, as part of the CARES Act, everyone can take a $300 above the line, so not subject to the itemized deduction rules, as a charitable deduction in 2020. So, let's not forget about those charities while they're struggling the most.
But we're also hearing, what does this look like on the other side? What does this look like 6 months, 18 months, 24 months, right? We know that small business is going to be affected, but we're seeing a tremendous amount of collaboration, small businesses working together, small businesses combining efforts, caterers coming together to serve. One has a kitchen, the other has the staff to be able to do it. Pulling resources together. We're going to see companies get stronger when this comes out. We're also going to see tremendous amount of folks working from home because there's going to be a period of time that people aren't going to still want to go to the office unless they're required. So you're going to see a lot more mobility, less transit. People are going to be very reluctant to use transit. They're going to be very reluctant for a while to go to games and stadiums and movie theaters. And so for Roswell, as a place that is traditionally outside and utilizes, it's going to be very important for our Parks and Rec to put into place things that get us out and gives us opportunity to socialize, but still be able to have the distancing.
Some of the recommendations that we're given to customers at this point, if you do work with a bank, is to over communicate about the impact that COVID-19 is having on your business. If you work with a good banker, they're going to be reaching out to you at least a couple times a week to understand the changes that you're seeing in business so that we can react appropriately to it. The worst case scenario for a bank customer relationship is for the bank to be surprised and just, if a company were to come in 2 months from now and say, we're having significant cash flow problems, working capital issues, this, that, if we're working with that customer throughout this entire process, it just makes that a lot smoother on the back end. As we like to say, we like to work in 90-day increments. So right now, for example, on some of the deferment options that are available to customers, those are 90-day deferrals. And as we approach that deadline, we'll certainly revisit those and kind of look ahead at the next 90 days and see what we need to do. So for the business owner, it's a good idea to be working on 90-day cash budgets that include assumptions in them as well, to share with the banker and have those conversations so that everybody's in tune as to what's going on. And so again, that we can react appropriately.
Yeah, the only thing I would dovetail on that is I would say hoard cash. Pay the bills you have to pay. Call your landlord and negotiate your rent early and often. They're expecting that call. Call your suppliers. Say you're going to make the payments you can. Keep a certain amount of good faith moving in the same direction, even if you can't pay 100% of your rent or 100% of that supplier that you've known for however many years. But be conservative, because I have a feeling this is going to go on longer than we expect.
I encourage small businesses to reach out to other small businesses that even if it's out of your industry, just to talk through some. These are times that are non-traditional. And Kevin and William made valid points about talking, conserving, looking at trends, because it's not going to be what we had before. And I think we can't over communicate enough in this crisis.